What are your takeaways?
Well, you ran through a number of the things that they did and didn't do. Certainly, the fact that they changed the forward guidance was widely expected in a number of circles. This is a kind of a mild change in forward guidance to a certain extent. The forward guidance since 2019 has been linked to COVID-19, and there was also keeping the door open to more stimulus by the government as needed. Well, the economy has moved forward from COVID in this country and many countries, and the government in the middle of May by then is going to scrap all references. No more COVID requirements. You can get on a plane, whatever you want to do. So this was considered a kind of a convenient way to make a shift in guidance that wouldn't look like a big deal, would be significant, but not something that would be market moving or suggest that a whole lot more was on its way, to take out that reference to COVID, to take out a statement that said keep rates at these levels, low or even lower levels. That's gone now, okay? So that's significant. The fact that they're going to have this long-term policy review, a year to year and a half. Back in early 2016, when they first went to negative rates, they had a review that lasted a month and a half. So it indicates this is going to take time. We're going to think very hard. They're going to look at a lot of things. They didn't change any of their tools, including yield curve control. I don't find that too surprising. I think a lot of people didn't, because Governor Ueda, all his testimonies in Parliament, particularly over this last week, ahead of this very important first meeting for him, had indicated that he was worried about inflation. Maybe it's high now, maybe it won't stay high, but yield curve control, no change, not yet.
Kathleen, I mean, were there expectations that there would be something a little bit more, considering it was, 40 minutes late? I know you were waiting for every single minute of it, but is this something that maybe is anticlimactic for traders?
Well, maybe for traders, because traders, like traders in the U.S., trying to always think the Fed's on the verge of cutting rates. I think maybe traders got themselves talked into a little bit more, like they have to do something. Governor Kazuo Ueda, before he stepped down in April, back in December, had that very famous tweak to YCC. But I think a lot of the indications from Mr. Ueda have been a very important message from the BOJ. Yes, inflation's hot now, but is it going to stay hot? And you mentioned a couple of the increases in the forecast for 2023 and 2024. I find those very significant, because the BOJ is acknowledging it's even stronger inflation than they expect it would be. But their concern is, okay, it's strong now, but will it stay strong? Will the spring wage negotiations in 2024 be as strong as they were in this past spring, 2023? And I think that's a big question now as you look at what happens next. Some things had to be done, some things didn't have to be done, but they're not changing tools. They're not looking at negative rates. And maybe he wants to come slowly out of this gate.